Hello, everyone. My name is Matthew Frailey. I'm the founder of BreakpointTrades.com. And as you can see here from our website homepage, what we specialize in is advanced technical analysis on the general markets, on commodities, precious metals, even mechanical systems, automated trade algorithms like you see here. And we also give you a bunch of actionable trade idea setups, coils, flags, whatever. And we've been doing this since 2003. So I think we're one of the older firms out there. We've had many thousands of members over the years, and we continue to do so. All right. What we do here is we put out 5 newsletters per week with all this material, and we send them out to our subscribers. And once in a while, I send out some to a free list. But what I'm going to start doing is I'm going to start recording my newsletters as well and posting these on YouTube. It's kind of a shame after all these years, I never tried to get a real presence on YouTube. So I want to change that, and that's what it'll be. Now, again, these videos are going to be deep dive into technical analysis. They're going to be quite long, especially these weekend newsletters. They tend to be anywhere from 30 to 40 minutes long. So what these videos are not is quick 5-minute videos to get your attention, to get a bunch of clicks that don't really tell you anything. These are if you really want to get into the weeds and you want to learn. Okay, so hopefully got quite a few of you out there. So what I'm going to do here, so it doesn't take me a lot of extra work, is what we typically do is I record a newsletter. This is actually my recording page, my admin page, and I record each of the charts in the newsletter like this. So what I'm doing here is I'm just going to screen capture everything. So I'm going to keep the standard newsletter format, but also have a video where I can point out things, et cetera. So I'm going to go ahead and start the newsletter like I normally would. So let's do that. And I'm going to click this record button here. Hello, everyone. This is Matthew Frailey with BreakpointTrades.com. First off, I hope everyone had a nice weekend so far. It's Sunday afternoon, August 29th, and this is the comprehensive weekend newsletter for BreakpointTrades.com. Okay. One thing, guys, I am doing something different today. I'm obviously recording the newsletter as normal, but I'm also screen capturing everything as a video. So you'll be able to watch that if you want to see me point out things like in a video format. I plan to start posting a lot of these on YouTube to develop a presence. So anyway, if you happen to be new here at Breakpoint Trades, we have a ton of charts here, especially on the weekend. Weekend newsletters tend to be longer, and I'll reference the charts number on the upper left-hand side, keep you from getting lost. So the first item here is the table of contents. You can see the format the newsletter is divided into. Same general theme as I usually keep. We look at the major indexes first, some of the upcoming economic news, review last week's action, what I think going forward. We look at some key market indicators. We examine all the major sectors. There's about 21 of them. We also look a deep dive at commodities, bonds, currencies, US dollar, Bitcoin, cryptocurrencies, precious metals, of course, and also trade ideas. I cover the setups that triggered over the last 1 or 2 weeks, make some comments, and I did add a handful of new setups. Okay. Again, there's a lot of content here. I'm not going to read all this verbatim. What you could do is pause the newsletter or the video, whatever you're watching, and read this. But basically, just in short, the market pushed higher, nicely higher last week. As you know, the previous week, the market had a correction. It basically bottomed on Thursday morning and has rallied nicely from there. On Friday, the S&P made a new all-time high, closed up about 1.5%. The NASDAQ 100 also made a new all-time high, closed up 2.8% for the week. The Dow lagged a little bit, closing up about 1%. Appears to be in a daily coil pattern. The Russell 2000 gained the most, up 5% for the week. It's been lagging the most, so it's trying to play some catch up. Okay. We had the Jackson Hole event last week on Thursday and Friday. Basically, the Fed made it clear they're not going to taper anytime soon, and that's why the market powered higher again on Friday. Let's face it, guys, the market has really, what's been driving the market over the years has been all this QE, Fed liquidity, Fed's pumping in 120 billion a month. The market is like a heroin addict. The drugs must continue to flow. If they get taken away, you get convulsions, whatever. So I don't know how the Fed's ever going to get out of that, but let's be honest, that's really what drives the market. It's all about that. If you go back and look at previous market corrections, they usually coincide when the Fed pulls back a little bit of the money supply. So anyway, coming into the week, a couple of things I'm going to be focused on. Clearly, obviously, the market is uptrending, right? S&P, NASDAQ made new all-time highs, all right? What's been lagging is the Russell, okay? So I'm really going to be watching that closely. If that continues, the market's going to continue higher, the Russell should, and the Russell would likely outperform the other indexes. So if I want to be long the indexes, if I think they're going to continue, I'd probably want to have more weighting in the Russell. Also, I'm going to be watching the S&P very short term here. On a 60-minute time frame, there's some MACD divergence and a 5-wave high potential pattern. So if we turn down right from here, that'll have my attention. But if we just continue up, we could erase that divergence, and market's likely to rally more. So I'm going to be watching that real closely. The S&P tagged the 4,500 number. A lot of technicians were targeting that area. There's also a timing window here where you can sometimes get a market inflection reversal. We're also nearing the September timeframe where the market's historically weaker. I'll talk about that below. Also, the VVIX closed back below 110. That has my attention. Okay. A couple other things. Commodities. They've had a nice recovery. They look pretty decent, especially with that dollar weakening. Gold looks quite a bit better. We saw a nice reversal there. So let's go ahead and take a look at the charts here, guys. So again, if you're looking at this on the video, you kind of see how this works. So what I do is I hit this arrow up here. That takes me to the next slide. And what you'll see here is once the first audio is recording, this will go away. There you go. You see it popped away. So this cell is now recorded. This is how Steve and I record the individual cells. We're recording one long audio, but whenever we hit this arrow button, that creates the break, and it splices them up. So I'm now recording cell number 2 here. But anyway, item number 2 here shows the index sector table, what transpired last week on the market. So the major indexes at the top here, you can see nice gains on Friday, nice gains for the week. The Russell clearly led. S&P up 1.5%, made a new high. NASDAQ up 2.8%. For the major market sectors here, pretty broad rally for most of them. All these sectors that were down were healthcare, drugs, utilities. Not surprising, especially utilities. They tend to be a safe haven, so money rotated out of there. Big move, metals and mining, energy, oil services up 13.5%. So nice rally on the energy area. A lot of those tested their 200-day moving averages and rallied off. So you read consumer staples down a little bit, but otherwise nice gains across the board here. Currencies, US dollar had a big drop on Friday after Powell's speech, and a big drop for the week, down almost 1%. Cryptocurrencies were up for the week, or up on Friday, down for the week a little bit. Commodities, solid green across the board, especially with that US dollar pulling back. The general DBC composite ETF up about 7.3%. Crude oil up 10.6%. Natural gas up 13.5%. Copper up 4.7%. Ag up 2.5%. So big moves here. Nice recovery into precious metals. Gold up 2%. Silver up 4.6%. GDX, the miners, up 5.7%. That area looks decent again. My advice on owning some of the stocks there would be probably just have some of the ETFs at this point. I wouldn't go too deep into individual stocks. They've come out of their washout sell-offs, and usually you'll have some, rallies and pullbacks along the way to establish positions on higher lows. Bonds, high yield corporate, rallying up with the market, and TLT down. Let's see, TLT down for the week. Next, Item number 3 shows the economic news calendar. And one of the big things for the week, since it's the first week of September, is the job report, non-farm job payroll report on Friday. Remember, that's the first Friday of every month. You could see other items here, ISM, ADP. Obviously, the market would be watching those. Next. So first image below, item number 4 here. So what I did here is, as far as seasonality, a lot of people like to talk about seasonality and September being a weaker time of the year. The issue you got here are some of these seasonality charts. This is why I put all 3 of them together from various sources, is they're all a little bit different. Now they do show some general weakness in September or early October. Okay. But here's one, the S&P back to 1928. And you can see here, this one shows peaking in early September and having some weakness, say into early to mid October, right? Now, if you look at the 59-year one, you can see here that this one, typically held up a lot during September. It wasn't until later September when you started having your pullback, okay? And here's another one, it's only 20 years. And this one here, notice you had just a, nothing here in early September. Then you had a rally in mid-September and then weakness. So which one will play out? I don't know. But, sometimes you do get some weakness around September, October timeframe. So just heads up. But again, obviously, these are not triggers. You got to get that off price action. Next. Let's go and jump to the index charts here, guys. By the way, as far as our admin audio, you can see how these cells are now recorded from the opening and all these before, and I'm now on this cell. So this is kind of our back end, guys. Anyway, so this first chart here, it shows a weekly chart of the major indexes. Again, just an amazing recovery, bull market we've had since the March 2020 lows. You can see the recovery last week. Again, steady Eddie up. Here's the Russell at the bottom, which has been lagging all year since March. Nice move last week. Still in this big horizontal rectangle pattern. Next. Chart number 6, here's the monthly view. The monthlies really show you how the market sort of went parabolic compared to times in the past. I mean, look at this. We had the big, 30, 35% sell-off in 2020 with the COVID, and it's just been straight up V moves, essentially. Especially, looking at these monthly charts. Eventually, we're going to need a correction, just some sort of sideways move to work this off. But for now, we remain in this momentum uptrend. Next. Chart number 7, here's the daily view of the major indexes. Again, the Russell really stands out to me as it took out this resistance last week. If we're going to continue higher, the Russell, I think, is the one index I'd want to be in. It would likely outperform the others. So it's got more catch up to do. You can see the uptrend line on the Dow, the S&P to monitor. Next, going to the major indexes themselves. So here's the Dow weekly. One thing I am monitoring over time is this rising wedge pattern. Okay, again, it still has wiggle room to move around in here if it wants to, but notice you have a MACD divergence setting up. Remember, divergence itself is not a sell signal, but you do have it setting up here, higher highs, lower highs still in the MACD. So this wedge pattern is something to monitor. And, if we get some sort of seasonality correction in later September, early October, maybe that'll work out. Next. Chart number 9, here's the daily view of the Dow. Now you do have a coil type pattern here. The bullish view would be have a little bull flag here. If we can break over this, we'll likely go to new highs again. Okay. This is your main support, this uptrend line. Next, let's move to the S&P chart. So here's a monthly view of the S&P 500 zoomed in view. So this just shows you how relentless the rally's been since the March 2020 lows. Straight up. And so far we've been up now 7 months in a row. Eventually we'll need just, some sort of consolidation like you see here. Again, if you're a super bull, you would want that eventually, guys. Markets ebb and flow. They're kind of like, a good analogy I like to use is, I don't know, if any of you are joggers or sprinters. You know, after a sprint, you'll need to rest to recover a bit so you can sprint again. And that's kind of how the market is. If it just keeps going and going, it eventually wears itself out. You get better and longer lasting rallies whenever you get rest periods. All right. And we've been, 7 months up in a row now. No signs of abating yet. One thing we'll be watching though, on a monthly chart, if we ever get one of these, say, doji type candle like this, you can see back here, these typically are signs that you're going to get a pullback. Like right here, you take out the low of that doji, you started a correction that lasted a few months. Same here, you had that doji. So taking the low of the doji there started a big correction. So we had a sorted doji here, but you never took the low out. Okay. And we had a doji here, but you never took the low out. So we'll be watching that eventually. See if we get one of those. Next. Chart 11, here's another monthly chart. This is one of our KISS charts. Same deal. First off, we have a DeMark, I think 14 now. If you don't know what DeMark is, it's kind of a sequence of that is fairly popular. And, that's starting to get a bit long in the tooth. We haven't had a correction. And just one very simple thing I like to look at is the moving average ribbon, like you see here. Most of you know what a moving average ribbon. Moving average ribbons, they go through periods of contraction, lower risk buy opportunities, and expansion. They get too wide, and you can see how super wide this ribbon is. Eventually, this is going to need a long consolidation period just because it's so wide, reversion to mean, basically. It's unsustainable like this over the long term. We'll eventually need one of these contraction periods. Next. Chart 12, here's a weekly view, very simple chart. One very simple guide, guys, if you want a trailing stop on markets, use your successive higher lows. So the green lines here represent your higher lows that have continued to form. So on the weekly chart, we've had 3, 4, 5, 6 essential major higher lows. And so if you're, say, on a 401k type plan and you wanted to stop out, this could be perhaps a stop area right here. You just move those stops up to each new higher low. Next. Chart 13, here's a daily chart. So one thing I wanted to point out here is that the corrections have been very shallow this year. The S&P hasn't had a 5% correction since last October. So that's quite a long time. All the corrections have been, 2 and 3%. And this year, all the corrections have basically, they've pulled back to around the 50-day moving averages. I have the 50 SMA and EMA on here. That's why you see 2 of them in red. But we essentially go down to the 50 SMA and then we find support and recover. That has happened 6 times this year. 2, 3, 4, 5, 6. Okay. So this is important because I think the next time we come down and test this 50-day moving average, I don't think we'll see lucky number 7. I think, because these sequences like this can't go on forever. All right. So I think the next time it probably won't be lucky number 7. But obviously in the short term, we continue to push higher. But again, if we turn down sharply, let's say in September sometime, and we start nearing this 50-day, I would watch that. You can see clearly that's an important area. Next. Chart 14 is another daily chart, same thing. You can see the moving average ribbon up here. It's remained bullishly stacked the entire year. That's also a very simple guide, guys, if you happen to be new here. Next. Chart 15, here's a zoomed out daily view of the S&P, a couple moving average ribbons up here. But one thing you can not see here is this, perhaps this very long rising wedge that's been forming, almost a year long, basically a year long, all the way back to September 2020. So we've been in the confines of this wedge. And you can see if it wanted to, price could still go higher and still stay in this for quite a while if it wanted to, but something to monitor. Next. Chart 16, here's a 2-hour time frame. So you can see how the pullbacks have been so shallow. Look at these pullbacks. You can see V rallies, baby. On the stochastics, you really see that. Boom, boom, boom. And the last one. We do have a little, again, the last pullback got near the 50-day moving average on a daily chart. This is a 2-hour chart. We do have a little MACD divergence setting up here to monitor. Divergence can be negated on a further push, but we do have a divergence. Next. Chart number 60. Now here's the 60-minute chart I talked about in my opening comments. So notice after finding support down here a couple weeks ago, we have a potential 5 wave here. 1, 2, 3, 4, 5, and we have MACD divergence. You see that? That's why I stated here, guys, I'll be watching the S&P very closely early this week. If this curls down, then it's possible we have a 5th wave high in here, okay? Now, if this just continues going up, this divergence could be negated and this can extend. But we do have a potential 5 wave, so that's why I want to see what the market does early this week. It's going to be important. If we head down, then I'm going to get cautious, like I said. Next, chart number 18. Here's a 15-minute view. If we do start selling off, one target initially could be filling this open gap. The S&P particularly really loves to fill these open gaps, okay? Next, let's move on to the KISS charts. So first off, here's the daily KISS on the S&P 500. Notice we got a new DVT on the daily. It's actually lower than this one. So again, really not much new to say here. You know, Steve and I pointed out these moving average ribbons. It's quite interesting how you can see the thick one here is the BPTMA Deluxe. That's a custom moving average that we developed. The other moving averages here are standard moving averages like the 9, 20, 34, 50 EMAs. But you could see the red, where it goes red is where the slope turns negative. And you could see these last 5 corrections, the slope was red for only 4 bars. Quite symmetrical there, quite honestly. Next. Chart number 20, here's the 2-day KISS. So DVT here is 42.48. So wider than the daily. Gives you a little wiggle room there. You can see this has done a pretty good job. By the way, the thick here is where the weekly ATR is. Next. Chart number 21, here's the weekly KISS systems on the indexes. So the S&P, you got a new DVT confirmed on the weekly at 42.37. So it's about 100 points lower than that 2-day. And here's the triple Q. You also got a new DVT at 347. No new DVTs on the Dow or IWM here. So again, if you happen to be new here, you're wondering what is a DVT? It's supposed to be dynamic variable trigger stop. So think of it sort of like an adaptive trailing stop. It's an idea, stop idea. You know, where these could be useful perhaps is someone who has, you know, money in index funds, say in a 401k plan that are tied to the market, and they want some sort of stop out, you know, in case the market were to have some, you know, 30% correction, 40% correction like it did in March 2020. They want to avoid that. So these give you the stop out level. Again, it's pretty logical to think about. The weeklies don't trigger very often. You can see the weekly here, you know, none of the pullback corrections we've had since the early 2020 have been hit. So, you know, these might be useful for someone that rarely wants to have the DVT hit. The daily is going to hit maybe 4 or 5 times a year, going to get some noise, and the 2-day is less. So we have people that use a combination of them. We have people that use just the weekly and 2-day. So kind of whatever is your forte, but it's a tool. It's not a full-fledged system. It's something to use in conjunction with your things. Or if you don't have anything tied to the indexes, you don't trade the indexes, then don't worry about it. Don't follow it. All right. Next, moving to the back to the S&P. Here's the time frame. So here's the daily at the top, the half day, 195 minute. We still have this resistance cycle, poking a little above it here, but we haven't really, you know, taken it out strongly. So we could still reverse there. We bounced off these ATRs last week. Some little A there, amateur buying. So next. Let's move to the triple Qs. Triple Qs weekly up 2.25% for the week. Some divergence here, but as of yet, no major change in trend. Next. Chart 24, here's the daily chart. Broke out of this range. You can see the moving average ribbon pinch there. Again, guys, just a very simple guide. Whenever these moving average ribbons pinch, look for buy opportunities if you're in an uptrend. Okay. They're not perfect, but they're pretty good. You had one here, you had one here, and you had one here. And really nothing else to say there. Next. Chart 25, here's the 60-minute view. You can see how we broke out of this range. That is now support. Next. Moving to the KISS charts, here's the daily KISS, still at 350. Let's just round it to 359. You can see it's been active since back here in May. It's where it went back long. You can see the moving average ribbon pinched with the BPTMA Deluxe there. By the way, you had an ABC here, 4 color change, A, B, 1, 2, 3, 4, ABC. Next. Chart 27, here's the 2-day KISS. It's been active here since March, as you can see. Not been hit. Still no new DVT, but if we get a little upside move this week, I think we'll see a new DVT generated, 355. Next. Chart 28, here's the 2-hour time frame. You can see we got a DVT here, 372, very tight. These are honestly quite not that useful, guys, unless you have these on your computer. But I will be sharing these eventually for folks who want to get TradeStation because I have some awesome tools there. You can also see a 4-color change here on the ribbon, ABC. Next. Chart 29, here's the cycles. Similar to the S&P, all right, little resistance cycle up here. We got a resistance cycle here in the 60-minute. ATRs are support. Next, let's move to the Russell. This is my other important index that I'm monitoring. So the Russell, it's been consolidating really since March, then in a sideways consolidation. Back in March, I commented how the moving average ribbons were super wide and needed to consolidate. And look what's happened. Basically, that is what happened. We've had more of a consolidation in time versus price, but we got that. Just like the moving averages were too wide here. You see that? So they're too stretched. So you were due for reversion to mean rally, and we got it. They were too wide here. Reversion to mean rally. So when they get too stretched, you need that consolidation. And again, guys, that's kind of what concerns me about. Let me go back to that one chart. The S&P monthly. You have the super wide moving average ribbon on a monthly chart. Eventually, that's going to need to consolidate. And because this is a monthly chart, I mean, it may take 6 months or a year for that to consolidate. So something I'm just monitoring. But anyway, the weekly chart here, you can see it's in this big range. If the market just wants to continue rallying this year, well, if it eventually breaks out of this, it could start another big rally. Next. Chart 31, here's the daily, shows you the same thing. We broke out of this range last week. If you're long the Russell, you could put a tight stop right here, guys. Again, this market's either going to follow through right to the upside this week, or it's going to reverse down. So, you know, that's why you could have a fairly tight stop right here. Next. Chart 32, here's the 60-minute view. You know, your stop could be right there, high or low. So tighter on this 60-minute right here, okay? There is an open gap down here to monitor. So there you go on the major indexes, guys. Again, I'll be monitoring this week to see if we get follow through. I'll be watching that 60-minute S&P chart, see if that fifth wave plays out or not. Also, the VVIX, it's below 110, but let's get to that. So next indicator below, item number 33, this is the VIX. So here's another kind of a simple system, guys. The VIX with the Bollinger Bands. Whenever the VIX goes outside the upper Bollinger Bands and then closes back inside, which is where these vertical lines show. Again, outside the band, back inside the bands. That's a buy signal. And you can see how well those have been working all year. You got a buy signal here, 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 here. So they've all worked very well. Okay. Next. Chart number 33, the VVIX. Now this has my attention. It's been a pretty good guide whenever this is below 110, but whenever it comes back above 110, usually it's a signal that the market's nearing some sort of correction. And it did close back below 110 on Friday slightly. So it closed at 109.62. So this definitely has my attention. The market just wants to rally up from here, and this could just stay below 110. But if it comes back above 110, it'll have my attention. Next. Chart number 35. Again, we all have been looking at these McClellan oscillators, these breadth indicators. Here's the NAHL. Again, you can see how this is just, all the NASDAQ itself making new highs. This thing is still buried. Again, you could look at all kinds of various McClellan oscillator type things. We still have these. So going to be interesting to see how these play out longer term, but you can see the divergence here. Next. Chart number 36. Here's another chart. This is the large cap advanced decline line versus the small cap advanced decline. You could see, back here in late July, we had a higher high here, lower high here. That led to that quick correction right here. And at the moment, we do have another divergence, higher high here, lower high. Now, again, this divergence can be erased should this continue up without a correction. But for now, you do have a divergence to monitor. Next. Chart number 37, one more indicator to monitor. This indicator here is the NASI, plotted as a histogram. And it's pretty amazing to see how negative this is, how far below zero, while the NASDAQ itself just continues to new highs. So, again, what this tells you is we've had a lot of individual stocks not participating as much in the market, more of the large cap stuff. So just something to monitor. You can't get your triggers off this stuff, but we'll continue to monitor. Next. Moving to bonds, chart number 38, TLT. So TLT had what I thought could have been an ABC correction of the 50 and 200-day moving averages here, rallied up. Now the bullish view is you got an ABCDE coil. This would be the bullish view where the E is here. We'll see if this rallies up. Again, bonds move opposite of interest rates. So if rates go lower, bonds go up. Next. Chart number 39, J&K, high yield corporate bond or junk bonds. Remember, this moves with the market. This is breaking out. And as long as this continues higher, that's healthy for the market. So always watch this. Now let's look into the individual market sectors. We like to review all the sectors, major sectors, just to give you a view of everything under the surface. So here's the transports. They were downtrending since May. Put a little bottoming action here. They got a coil here. Moving average ribbon's tight. Remember, that's when you get your bigger moves. So market wants to rally. Again, this is set up if it wants to. Next. Chart number 41, XLF financials. This still looks good, looks bullish. It broke out of this resistance here. Pulled back. Notice it found support right here at previous resistance, which turned support. Remember, technical analysis, that happens a lot. So these are all low risk buying opportunities if you can retest to that support. By the way, I have a new trade idea below. I'll get to that later where I have one of these setups, but this looks bullish still, guys. And if the Feds, keep rates, anyway, let's go ahead and move on. Chart number 42. Here's the weekly view of XLF. One thing to note, though, this could be a longer term fifth wave. So I don't have it marked here, but you can see how the MACD is lagging here. It's likely that this can make new highs where the MACD will not. So usually MACD divergence forms on a fifth wave. So you got your wave 1, 2, 3, 4, and this would be 5. So you could be setting up for a fifth wave high later on. Next. Chart number 43, banks, similar to financials. You can see the retest of the broken trend line there. That was a good low risk buy opportunity. Still looks bullish. By the way, I have some banks, financials as long ideas. So let's take a look at those. Chart number 44, QB, it's in the banks. It broke out of resistance here. This would have been the place to buy it, but I just saw it this weekend. You got a horizontal resistance right here. You got nice volume. So maybe one to follow through on momentum. Next, chart 45 GBCI, another bank. Notice gets coiled with the moving averages. You got resistance right here. Moving average ribbons pinched. So if you went long this, a swing stop could go right here, guys, right there around 53. Next, chart 46 OZK, big coil like pattern. It's in the banks. So your long would be up here. You know, stop would be at a higher low for a swing. Next, chart 47 FNB, another bank resistance right here. I like how the 50-day, 20-day, 100 or 200-day moving average are all kind of coming together here. Nice volume. So if you went long here, your stops, they could go right here. All right. All right. Move on to other sectors. Chart 48 XLK technology, very similar to triple Qs. It's following this parallel channel at the moment, still holding up. Next. Chart 49 XLC communications sector. Again, reason we showed is it contains a lot of these FANG stocks like Facebook, Apple, Google, or not Apple, but Google, Facebook, Netflix, stuff like that. Broke out of a coil, flagged, still looks healthy. Next, chart 48, here's semiconductors. Next, chart 51, biotech. This was a nice lower risk long last week near this double bottom support. I'm long a position of this. Finally, you know, took out the downtrend line here, moving up. And again, this is one that I'm hoping could be a better swing because it's, you know, it's been in a downtrend really since February, whereas all the other major indexes have been making, you know, been uptrending since then. So we'll see. Next, chart 52. Here's the weekly view of XBI. You can see it pulled back to this support, potential support area was previous resistance. So this, again, this is an area where it could try to go. Notice the MACD here. You have this double hump. That's something I like to see. You know, a MACD cross here could be bullish. When you got two together like this, you have a higher probability than when you just have one the MACD first just touching. That's, of course, is a longer term support. If it instead fails, comes down, that could be a target if it were to sell off. Next, chart 53, healthcare. It's just been a hell of a runner, finally pulling back though. You can see it had some MACD divergence setting up. Next, chart 54, there's the weekly view of healthcare. It's been in this kind of parabolic up move. I thought this was the best way to illustrate it. Next, chart 55, XLI industrials. It's more in this horizontal sideways range, quite honestly. You could see. Didn't really know what other pattern to draw. It's really what it's been in. Next. Chart 56, materials. You know, looks okay. Bounced off the 50-day recently. Next. Chart 57, XLP. Pull back there, not really nothing, but it, you know, it's okay. Next, chart 58, XOU utilities, nice pullback here the last few weeks. Again, this is your long-term resistance, which was taken out a while back. Actually, this is the daily, I'm sorry. That's your support now. Next, chart 59, here's the weekly. So again, you can see how this is potential major support. It was resistance back here, 2020, resistance here. So it is now potential major support, low risk buying opportunity on a retest there. Next, chart 59, XOY, consumer discretionary. Not much to say about it. Not as strong as the other sectors. Next, chart 61, retail, more in this sideways range. As you can see, I drew an uptrend line here as a major support. Resistance is here, obviously. Next, chart 62, IYR real estate in this uptrend channel. I drew a downtrend line here to monitor. If it can take that out, then maybe we can get another rally up. Notice your moving average ribbon. It's pinching here quite hard. Again, when you get these pinches, those are your areas where you can get nice moves from. Next, chart 63, XHB home builders. Steve's kind of monitoring this index. So let's take a look at a few individual names in here, or one anyway. So here's ALLE. It's in the home builders, home construction. Got a clean resistance right here, 142.25. So one to monitor in that sector is a long idea. Next, chart 65, XLE Energy. Again, it had a nice correction from the June highs from this rising wedge. Clearly buying around this 200-day moving average was a low risk buy opportunity, which we talked about. Nice rally up from there. Next, chart 66, XLE weekly. You can see how this was also a major support area down here, right here. It didn't quite tag it, but we got down into that area. Next, chart 67, oil services. Really nice recovery there. Finally, chart 68, emerging markets. Want to watch this. So emerging markets, you can see it's been in this potential ABC correction all year long. So while our markets, US markets have been rallying up, this has been in correction mode. The bullish view, again, is you have an ABC correction. You notice this previous resistance from 2018 is now potential support. So if you're looking for an opportunity to go long emerging markets, this could be an area with a stop down in here. All right, let's move on to commodities. Click that, chart number 69. By the way, guys, you can see how that works. So yeah, click that, it goes to chart number 69. You can see it recording. You can see all the audio cells have audio except crude oil. So this is how our back end works. Anyway, here's the weekly view of crude oil up 10.6%. Big rally. Long-term resistance is obviously right here, going back to 2018 to this year, 77.50. Next, chart 70, here's the daily view, basically in a downtrend channel. These parallel lines, nice rally off of that. Next, chart 71, natural gas up 13.5% for the week. Big rally off the 9 EMA there. See that? Very nice rally from that big coil, which we pointed out. We also pointed out this double bottom way back here too, guys. Those are all low risk long opportunities. Also, just from education guide, you can see your moving average ribbon. Again, like I state, whenever the moving average ribbon is pinching, is your low risk buy opportunities, like here, pinching from a bullish configuration. And you happen to be right here at the low. Now it's kind of wide, isn't it? Little divergence here setting up on the 5 RSI. Next. Chart 72, natural gas daily, broke out of this little range here. Didn't quite tag the 50-day, might have tagged the 50 EMA. That's the SMA, but nice rally out of there, increased volume. Now you do have a MACD is lagging overall. Could be maybe a fifth wave up here. Next. Chart 73, copper, nice recovery last week, up 4.7%. The bullish view here is you have some sort of big ABC consolidation. Next, chart 74, here's the daily chart. See, we basically tagged the 200-day moving average here, recovered. We're kind of trying to take out these converging trend lines. Again, you know, someone's long copper, you just have a stop here. Next. Chart 75, DBA, agriculture ETF, hell of a rally last year and this year. We all seen it in the food prices, right? You go to the store, grocery store, inflation, it's higher than what the Fed states. I think you'd all agree with me. But anyway, kind of resistance here. Still looks good, guys. Next. Chart 76, here's the monthly view. Notice the moving average ribbon, how it flipped. These comments are old. It obviously confirmed a new major long-term uptrend. But you can see this thing was downtrending for years. Look at this, years. I pointed this out last December and January, that it was emerging from a long-term monthly downtrend channel. And up it's been. Still looks like it has a long way to go, guys. So unfortunately, inflation's here to stay and likely going higher. Blame the Fed and all the easy money. Next. Chart 77, here's the daily view. You can see tested this resistance now 3 times. We'll number 4 be lucky number 4. We'll see. Next. Chart 78, corn is in a coiled pattern. Again, why do I show corn? Well, you can trade this. It's an ETF. Moving average ribbon is coiled tightly. Next. Chart 79, lumber. Lumber has had just a crazy reaction. Look at this thing. Parabolic up move. Topped out there in May. Straight down move, but big support down here. Next. Chart 80, lumber on the daily. This is just an unbelievable textbook 5 wave. Look at this. 1, 2, 3, and then wave 3, you have your sub waves. 1, 2, 3, 4, 5, and you have MACD versions on the 5th wave. Just textbook. I mean, if I could be long lumber futures, I would be. This is just bullish. So I am long the wood ETF, which doesn't seem to move exactly with this. Let's take a look at that. Chart 81, here's wood. Again, you can see it just doesn't move with that, but I am long some. I'm assuming that if the lumber does go up, the chart above this will work higher, but you can see the correlation is not direct. Next. Chart 82, uranium ETF. This is one I called the bull market last year in. You can see this long trend line there that it busted. A hell of a rally. I said this pullback, it had a healthy correction this summer, was a buy opportunity. Nice rally last week, up 11.3%. Next. Chart 83, here's the monthly view. Again, it emerged out of a multi-year base. That pullback the last couple months was a pullback in the long-term uptrend. Look at the moving average ribbons here. Next. Chart 84, URA daily. So you can see you got a little below the 200-day moving average. Was actually a buying opportunity. I'm long this in my IRA. Next. Chart 85, CCJ. A lot of the uranium stocks had that look too, like CCJ. You could see a little undercut of the 200-day moving average and recovery. All right, let's move to some cryptos. Chart 86, Bitcoin. Bitcoin rallied off that major support back in July, held that. It's had a pretty good move. Resistance, of course, some big resistance up here into the 61.8% fib. Back here, you can see that rounded top there, head and shoulder-like pattern that played out, obviously. Next. Chart 87, Ethereum. Here's a pattern to monitor that it's in. Let me see here, guys. Looks like something got out of order. All right, guys, sorry about that. Some charts got out of order, so let's start this again. Ethereum here. Again, we already talked about this. You can see it's in this kind of sideways pattern. Could be a bullish setup, perhaps. Next. Chart 88, Bitcoin Cash. So the bullish view is you got an ABC. We're going to get in the rally. Notice your moving average ribbon is pinching. Your cryptocurrencies, maybe one to monitor. Next. Chart 89, Mara. One of the Bitcoin type stocks, one of the major ones. You can see nice rally off the 9 EMA here. This is one of the better ones, but really no setup here at the moment, unless you buy a pullback. Next, chart 90, Riot. This one here, you do have a potential trigger setup over this trend line. Next, chart 91, Can. Nice base here. Here's another one to monitor. Notice you have the 200-day moving average coming right there as well. Next, chart 92, Hut. This is actually a follow-up on one. I gave this as a long idea a couple of weeks ago. I really liked the volume patterns. Again, it's a mining type stock. Beautiful volume patterns, broke out resistance, pulled back on super light volume. This is a buy opportunity down here. It flagged and it powered again on Friday. Next, chart 93, HVBTF. Here's the setup to monitor. You got a clean trend line right here. If you trigger long, I think you can put a stop right here. Next, chart 94, Mr. or MSTR, another last crypto stock. You got a potential trigger line right here. It is quite expensive. So, you know, if you don't want to deal with a $700 stock, you could focus on the other ones above. Next, moving on to the US dollar weekly view. You can see lost about 0.8% for the week. Next, chart 896, here's the daily view. You know, this kind of had a cup and handle look, but, you know, it gave a little head fake. It broke that, went up a little bit, and it's come right back down. Should this continue lower, that'll help the commodities and precious metals. Next, moving on to gold or chart 97, FXE, that's the euro. Get some MACD divergence that's playing out here. Next, chart 98, gold. So moving to precious metals. So gold here, it's had some wild action. You had a quick hard correction here, but it found support back here, you know, at those lows and rallied right off of it and had a good recovery last week. So notice your ribbons pinched here. If the dollar can continue weakening, this area may be set up. Next, chart 99, gold on the daily. Again, you can see that quick spike down there that found support back at this double bottom, rallied right off of there. It held up here while the stocks were selling off. The stocks got oversold and they started to rally. And so that's helped gold. You can see it's trying to break this downtrend line. Again, I think the precious metals look decent here now, guys. Next, chart 100. Here's silver. And silver here, you know, it's actually been this kind of wild action the last year and a half. Broke down from this big coil. That could be potential resistance up here. Next, chart 101, here's the daily view of silver. Really, silver's in a big range. That's what it's been over the last year and a half, from $22 to $30. Okay. It's really been in that big range. You know, it's been better to be a trader in the silver. You buy the support down here, you sell the resistance. Next, chart 102, GDX, the ETF, the miners, they did hold this support here. Next, chart 103, GDX in the daily, basically had a nice perfect double bottom here. So that was a low risk area to attempt the long. Like I stated in my opening comments, if you want to be long some of the precious metal stocks, at the moment, I'd probably just focus more on the ETFs at this point. So a big, you know, really wide swing stop could be the lows here, or honestly, I wouldn't even want to see it taken out Friday's lows. So you could probably put a stop right here. Next, chart 104, GDXJ. That's the juniors. Nice rally here. Now this was previous resistance, so I'd like to see it get over that, but I do like the volume patterns here. So I think it's got a shot to do that. Next, chart 105. Here's an individual stock. It was in a falling wedge, broke out of it. I'm along a little bit of this. I got to stop right here. Again, a lot of the individual stocks, you know, have just emerged from these steep downtrends or wedges. So I probably wouldn't focus on too many of the individual names. Next, chart 106, NG, another precious metal stock. All right, let's move on to some trade ideas. So first off, we've had some awesome ideas here, guys. This is really the bread and butter of the website, quite honestly. Our setups are outstanding. And as long as you put some work into it, you're methodical, you can make money on these suckers. So Unity is one that we had as a long idea. And you can see it took out this resistance here. It's had sort of a big inverse head and shoulder pattern. Broke out here. You had your opportunity to buy this sucker was on this light volume pullback back to this previous resistance turn support. You see that? Big volume up, light volume pullback. It's now set up into a coil here. So if you still own some, great. Have a stop in place and maybe buy some more over this trend line. The next target would be right here. And maybe over time, this open gap. Next. Chart 108 comp. This is a very tight coil setup we had back in early August. Look how well it's played out. If you still own some, I'd probably at this point put a stop right there at that potential higher low. We like these coil setups, guys, from an education standpoint, because let's say you buy right here. Your swing stop initially is right there. It ends up being pretty tight. Next. Chart 109, VIR, another setup that's worked out very well for a swing, was in a horizontal rectangle pattern. So if you bought in here, where would your initial stop go? Right here. And then over time, you move it up, take some profits, trail it up around that 9 EMA. Great trade. Next. Chart 110, one of our dividend plays that we like. This one pays monthly, by the way, it pays about 10 or 11%. And it's done very well. So all year long, you've gotten the gain and you've gotten the monthly dividend. Here's your monthly dividend right here on the indicator. Next. Chart 111, SFL, another great setup of mine. I posted it back here, but my comment right here after it broke out of this wedge, you could see falling wedge, MACD divergence, okay? True wedge patterns have divergence on the MACD. Now, I didn't post it here. I posted it after it broken out, but I said buy a pullback light volume, and you got it right here. You had a flag to the 20-day. So let's say you bought here, your stop could have went right here. And look at this nice trade you had out of it. So your risk was defined, your entry was defined, and you've had a nice trade. Next. Chart 112, LXRX, long idea that's been on the list for about a week. You could see trigger was around 390. So if you bought it early in the week, it had a little noise, you gave it some room initially. So if you bought it here, you maybe had to stop right here initially. Big break finally on Friday, expanding volume. So at this point, I'd be moving my stop up to my entry and I'd take some initial profits. Okay. Next. Chart 113, BYFC, coil pattern from last week. Broke on Friday, but pulled back off the highs. Still looks okay. I want to see it follow through though. Next. Chart 114, ELF. Here's the setup from last week that didn't trigger. It's still valid. Cup and handle like pattern over this resistance. Next. Chart 115, Lennar. It's in the home builders. Again, another potential bullish setup. This is your resistance. This is your support. Next. Chart 116, ASPS, following up on this one. This is, I've posted about this before. Their business is to facilitate mortgage foreclosures. They had a moratorium on it. That moratorium expired, and the stock is now potentially allowed to lift up. It's got a big coil here it's trying to break out of. I know some of you still own this. I still own it. Had to go through a little whipsaw back in here, but looking better. Nice volume break here. Let's look at the weekly. Chart 117, the weekly. Again, you can see it was downtrending for a couple years. So this has potential to move higher now that that moratorium is over. I'm hoping it can move back and up into this range. Next. Chart 118, HCC. Another idea that from a couple weeks ago, triggered early last week. My initial swing stop would have been maybe here or here at the widest. I like to use the higher lows. Nice move. My style would be now to take some profits, take half off, take 3/4 off, reset a stop, maybe trail the 9 EMA. Next. Chart 1819, BLDE, coil pattern that triggered last Wednesday right here. Big follow through on Thursday, where you could take some initial profits, still looks decent. Next. Chart 120, Blade, another one that triggered early last week, nicely out of this pattern. Take some profits, but a nice trade. Next. Chart 121, POWI, really nice move out of the pattern. So I hope you get the idea, guys. Really the bread and butter here at Breakpoint Trades is our trade ideas. We have great setups here. Start doing them. Next. Charter 122 ASML, another nice one. If you bought this little trend line break, your initial stop right here. Now, obviously, your initial stop would be moved up to profitability. Next, Charter 123 MIME was a coil setup. Again, if you bought this coil break, your initial stop for a swing right here. So I hope you guys are starting to learn, because a lot of you ask me, where's the initial stop go? Where's the initial stop go? That can depend, but I'm giving you some ideas, okay, based on what I do. Obviously, this is more than played out. This is one I went long. I am no longer in it. Percentage of move was great enough to be out of it. Next. Charter 124, HOLX, another coil. So if you bought here, where would your initial stop be, guys? Well, higher low right here. Now that it's starting to break out, I'd probably at least move it up to this candle low from here to here or to entry. You got a profit now. Next. Charter 125, CNK, long idea from early last week. I liked it as a low risk play. You had a 3 pattern push divergence. 3 higher lows on the RSI, 3 lower lows in price. MACD divergence, very low risk setup. Tag the 50-day moving average. This, by the way, could be a buy on a pullback that occurs on a light volume. Next. Charter 126 team, also a coil setup. Hasn't had a mammoth move, but it's, again, it enabled a tight entry. If you bought long here, your stop could have went here. And obviously, your stop could now be above entry. So you're guaranteed a profit. Next, Charter 127 PRMW, triggered over here and now taking out this resistance. Next, Charter 128 NM, another beautiful setup. Divergent low, big volume on the MACD. Last week I said to watch this one, big power up on Friday. So there's the triggered setups, guys. Some of these I'm not going to cover again, but you can see we've had some awesome setups. I hope you catch these suckers. Now let's move to some untriggered setups that you can monitor going forward. Charter 29, Apple, sort of in a coil pattern here. So if the market wants to have another run, maybe they'll break the coil. Next, Charter 130, CTAS in this ascending triangle pattern. Resistance is right here. Your initial stop would, be at the lower of this trend line. Next. Charter 131, looks like I got this duplicated, so let's move on. Charter 132, SGMO. Your long trigger would be right here. Next. Charter 133, ELF. I have a cup and handle look to it here. Resistance up here. Next. Charter 134, Oracle. Very tight pattern here. Your resistance triggers right here. Your initial stop right here. Next. Charter 135, PLTR, ascending triangle. If it tries to take out this high, I think you could have a long. Okay. If it retries that. Next. Charter 136, DCT. Nice long trend line here. Volume pickup. Nice base, resistance base on 46. Next. Charter 137, FLXN, tight pattern. So if you trigger over this high here, stop right here. Again, it's kind of wide, but the candles are big. Okay. Next. Charter 138, Sonos. We've been monitoring this one. I'm already long some of this, but kind of monitoring this as a cup and handle. This one, by the way, is a potential buyout candidate, in my opinion. Next. Charter 39, DOYU, tight little pattern here. So your resistance is 395. Your initial stop would be right here. Next. Charter 140, Kathy Wood, coin. Got a little trend line resistance here to monitor. Next. Charter 141, Airbnb. Here's one of those plays I talked about where you break resistance, come back and retest it. So you have a low risk buy opportunity on this trend line retest. Next. Charter 142, the final chart. My God, this has been a long newsletter. 60-minute chart MP, got a sort of an inverse head and shoulder pattern. Your neckline resistance right here. Initial target resistance here. Your stop would be right here. All right, guys, that does it. I'm worn out. I'm going to take a break. Have a wonderful rest of your Sunday and see you tomorrow. Take care.